Good morning and welcome to the Killik & Co market update. It's been another strong week overall for global equity markets, with a number of major indices reaching new all-time highs. A rally in markets early in the week was supported by further progress on the vaccination front, as the University of Oxford and AstraZeneca announced positive results from trials of their COVID vaccine. This is the third set of positive trial results in as many weeks. However, one important difference between this particular vaccine and those from the previous weeks is that the Oxford AstraZeneca product is both cheaper to produce and easier to store. The news of the vaccine, along with the Trump administration agreeing to begin the transition of power to President-elect Joe Biden, produced further outperformance earlier in the week in what have become known as go-out stocks. That is, shares in companies that will benefit from a return to life as it was pre-pandemic. Taking a look at the chart here, this chart shows a percentage return of each sector of the MSCI World since the first positive vaccine trial results were announced on November the 9th. As you can see, energy has been far and away the strongest performing sector, as the oil prices rallied on expectations of a recovery in demand. Financials have also performed well, as the credit risks associated with the financial implications of the pandemic have been reduced by the potential of a vaccine. Also, an improving economy could potentially lead to higher interest rates, which tend to be positive for the profitability of banks. The industrial sector, which will include companies such as airlines and airplane manufacturers, has also performed well over the last couple of weeks. However, it should be noted that some of the same sectors that have been the strongest performers in November have also been the weakest performers year to date, as this chart shows. As we approach December, one of the biggest events for financial markets during the final month of the year is likely to be the planned IPO of holiday rental platform Airbnb. The San Francisco-based company filed its S-1 form with the SEC last week and published its prospectus ahead of its potential listing, which includes various information about its business. It comes at the end of a turbulent year for the travel industry, as COVID-19 has prevented many from being able to travel abroad on holiday. The impact of the pandemic on Airbnb has been significant, with its gross booking value going negative in March and April due to the impact of cancellations and alterations on existing bookings. The business has recovered well, however, with a gross booking value of $2.5 billion in September, still down year on year, but a significant improvement from the spring and an indication that society's desire to travel has not been permanently damaged by the pandemic. Airbnb noted that there are actually a few categories that proved relatively resilient this year. These include domestic travel, travel outside of major cities and long-term stays, with the latter likely benefiting from those seeking to work from somewhere perhaps slightly nicer or slightly more spacious than their own homes. The company listed 6 core strengths that it perceives provide it with a competitive advantage, one of which was the strength of the Airbnb community, with 69% of revenues in 2019 generated by repeat guests, while 23% of new hosts in 2019 were guests on the platform first. In its commentary on the size of the company's opportunity, Airbnb put its total addressable market at an eye-watering $3.4 trillion, including $1.8 trillion for short-term stays, $210 billion for long-term stays, and $1.4 trillion for experiences, which the company has diversified into in recent years. The company plans to list on Nasdaq under the ticker ABNB. Finally, the UK government is one of several to have announced plans for a green recovery from the COVID-19 pandemic. And this week it provided details on the 4th round of its Contracts for Difference scheme, a method of supporting the development of low-carbon electricity generation. The government is aiming to double the capacity of renewable energy compared to the last round, and to expand the number of technologies supported, with onshore wind and solar eligible to bid for the first time since 2015. This chart shows how these CFD rounds have grown since the first one was held in 2015, with the 4th round expected to support 12 gigawatts of renewable energy generation capacity, up from around 6 at the previous round. Offshore wind, which the government has singled out as having the long-term potential to support the country's net zero target, will have its own pot in the auction process for the first time and will not have to compete with other technologies. We believe that the opportunity for offshore wind as a technology and for developers of offshore wind is significant. The IEA estimates that offshore wind capacity may increase 15-fold and attract around $1 trillion of cumulative investment by 2040, supported by falling costs, supported government policies and technological progress. Turning to the week ahead, earnings season is winding down now as we head towards Christmas, but there remain several interesting companies reporting next week, not least Salesforce, where we will look for further evidence that digital transformation continues to drive demand for its customer relationship software. Zoom, which of course has been a major beneficiary of the trend of working from home. And finally, Lululemon, another strong COVID performer as demand for athleisure apparel has increased this year. That's all from me. Have a great weekend and we'll speak to you next week.